Welcome to the Explainer. Have you ever looked at a stock chart and just felt lost? Like you're trying to read some kind of secret code. You see all those lines and bars and colors, and you know there's a message in there, but it feels like it's written in a totally alien language. Well, today, we're going to give you the decoder ring. We're going to show you exactly how traders find the hidden stories inside all that noise.
I mean, just look at this. This is what a lot of us picture when we think about chart analysis, right? It's just an overwhelming mess of lines and indicators. This perfectly captures the problem every single trader has to deal with, trying to find one clear signal when you're drowning in data.
So that's the big question, isn't it? If the market is this, raging sea of information, how in the world do you navigate it without getting completely lost? Or worse, sinking your portfolio? Is there really a method to all this madness? Well, yes, there is, and it's called technical analysis. Now, let's be super clear. This is not some magic crystal ball that's going to predict the future with 100% accuracy. Think of it more like that decoder ring we talked about. It's a tool that helps you learn the market's language, read its behavior, and start to understand the stories it's trying to tell you. So what is it, really? At its core, technical analysis is all about studying what the market has done in the past, we're talking price and volume, to get a better sense of where it might be going. The whole idea is based on two things. First, that a stock's price already reflects everything everybody knows. And second, that human psychology, fear and greed, tends to repeat itself in patterns you can actually spot. Okay, so before we start actually decoding, let's get clear on what the mission is. We've got this tool, so what are we really trying to do with it? Look, the goal here isn't to be right all the time. That's impossible. It's about stacking the odds in your favor. So analysts use this framework to first figure out the market's overall direction, its trend. Then, within that trend, they're hunting for these repeatable patterns or setups that signal a potentially good time to make a move. And ultimately, it's all about finding these moments where the potential upside is just way bigger than the potential downside. It's really a system for smart risk management. So if we're going to decode the market, we have to learn its language. And just like any language, it all starts with the alphabet. In the world of charting, the most basic letter, the fundamental building block, is a single price bar. Every single one of these bars on a chart, it doesn't matter if it represents a day, an hour, or even just 1 minute, tells the story of a battle. Seriously, it's a tug-of-war. You've got the buyers on one side trying to pull the price up, and the sellers on the other side trying to yank it back down. And each bar gives us 4 critical pieces of intel. The open is where the battle started for that period. The high is the absolute peak for the buyers. The low is the furthest the sellers could push it. And then there's the close. And the close is everything. It's the final price when the bell rings, and it tells us who was in control when it really counted. And what's really cool is we can actually put a score on who won that battle. We use a simple formula called the closing range. Just think of it like a score from 0 to 100. If the price closes at the very, very top of its range for the day, boom, it gets a 100. That's a blowout win for the buyers. If it closes at the absolute bottom, it gets a 0, a total victory for the sellers. Simple as that. All right, so once you can read those individual letters, the price bars, you can start to string them together. And that's when you begin to see words, which are just simple, recognizable patterns. Here's a perfect example. The inside day. This is when a stock's whole trading range for today fits completely inside of yesterday's range. You can think of it like the market just taking a breath. The big tug-of-war, it was basically a tie. It's a sign of a pause, of indecision, and that often happens right before a big, decisive move. And this shows something that is so important. Analysts never look at just one bar in a vacuum. It's all about context. For example, on this chart, you can see a bunch of strong closes, one after another, days where the buyers just kept winning that battle. Seeing that pattern over and over again, even when the rest of the market wasn't doing so great, was a massive clue. It told you there was some serious underlying strength here, like a coiled spring just waiting to pop. And that brings us to the real job of an analyst. It's exactly what this quote says. It's all about using the story from yesterday and the days before that to form a reasonable, data-driven expectation for what might happen tomorrow. It's not about finding certainty. It's about understanding the probabilities. Okay, so we've gone from letters to words. Now, it's time to zoom out even further and start reading the sentences and the paragraphs. And in the market, that whole story, that's the trend. A lot of analysts look at stocks as having their own little life cycle with 4 main stages. It starts with stage 1, this quiet, sideways period where not much is happening. Then, hopefully, you get stage 2, the big uptrend. This is where the real money is often made. After that comes stage 3, a topping phase where things start to run out of steam. And finally, stage 4, the decline. The whole goal of technical analysis is to figure out which stage a stock is in right now. And when you filter out all that day-to-day noise, a healthy stage 2 uptrend can become incredibly obvious. Just look at this chart. It's a powerful advance over multiple years. See how the price just keeps bouncing off that smooth, curving line? That's a moving average, and it's acting like a floor for the price. This is the kind of beautiful, clear, long-term story that analysts are always hoping to find.
All right, so we've decoded the letters, the words, the sentences. What does a winning story actually look like in the end? When analysts have sifting through thousands of charts, what are the characteristics they're really searching for?
Let's actually boil it down to a checklist. What are the key plot points, the big clues that suggest a stock story might be about to enter that really powerful stage 2 uptrend? A winning story often has a few of these key ingredients. Analysts love to see stocks that have shown explosive strength before. They also look for these quiet, tight trading periods, which can be a sign that big players are buying up shares on the down low. But most of all, they're looking for signs of huge demand, like a stock suddenly gabbing up in price on massive volume. Every single one of these is a clue that a major move could be just around the corner. But if you only take one thing away from all of this, let it be this. Technical analysis will not tell you the future. It's not a crystal ball. What it is a repeatable framework, a system for analyzing how the market is behaving, for spotting those favorable risk-reward opportunities, and for managing your trades with a clear, disciplined plan. You know, in the end, a chart is really just a footprint of mass human psychology. It's a visual story of our collective fear, greed, and hope, all playing out in real time. The patterns of the past give us some incredible clues, but every single day is a brand new chapter. The only question is, what story is tomorrow going to tell?